yes, every meeting is live. And if you go back when we were coming out of COVID, for example, and inflation was shooting towards 7%, we weren't waiting for quarterly meetings then. We were moving much more quickly. Then you'll recall, actually, when the markets expected us to move in July last year and we didn't, that caused a lot of angst as well, and now I think they're settled on the fact that we only go every quarter. I would dissuade them from thinking that. I'm not making a prediction about March, but it will be a live meeting. We have inflation at 3.8% headline and we have unemployment at 4.1%, tight. The board will be actively looking at whether or not it needs to move more quickly. So I would discourage people from thinking that we necessarily only move every quarter. The other possibility is that if this is a very prolonged conflict and there is a very, very elevated and lengthy rise in energy prices, this ultimately is going to feed through into economic activity. There's been a bit of movement in expectations about what central banks might do with monetary policy, but basically it's been pretty orderly. Equity markets have reacted as you might have expected. Are we in a position where it's difficult to look through, particularly if it's an elongated shock? You mentioned some of the instances where it's quite easy to look through the shock, but this one might be a little bit harder because, as you say, we already have elevated inflation, and I think there is a risk that inflation expectations might become a little bit unanchored.